Hello, folks. It is Thursday, October 19. It's about 5 o'clock in the afternoon on the East Coast of the United States. I'm going to take a quick run through the charts today. A lot of movement happening because of events in the Middle East. Let me share my screen and we'll get started here. You can see I'm I threw a thermostat on there, or actually a temperature gauge, and just an indication that we're having a heat wave. A lot of people, there's a lot of versions of this song. I prefer Ella's version. It's heat wave, having a heat wave, tropical heat wave. And I, just trying to to laugh instead of crying. So anyway, interesting world we're living in these days. So we're looking at a daily chart of gold. We see that we had another big move today. Let's see, we closed our up currently $18.30, not quite a percent, about 0.9%. Poked up through this prior high. So making a move up, a new move. And of course, that means that our next target is, the next previous high, which is 2009. So before we get to 2009, we probably see some kind of reaction right around 2000, just because it's a round number and a significant round number. And so I would say that our next target in gold is 2000. And of course, what we're seeing currently is that every day when geopolitical events heat up, gold's making a big move. So anyway, gold is serving its purpose as a refuge or safe haven from rising geopolitical tensions. And of course, that's why I'm thinking of heat wave, is because we got a tropical heat wave happening in the Middle East currently. So silver is not reacting as dynamically as gold is, and I was kind of curious about that. It didn't really make sense to me. But then the money changer, that's Franklin Sanders, that's the moniker that he uses, the money changer. According to him, a lot of the hedge funds, instead of just going long gold, they go long gold and they short silver. And so basically they're playing the spread between those two metals. They're hedging their gold position with a short in silver. Another way of saying that. But so anyway, that could explain why we're not seeing silver move up as strongly as gold. But of course, we know that silver will play catch up at some point. Silver will move to the upside and catch up with gold. So mining stocks today, they were up, not a lot, just a little bit. And of course, they, poked up into or tested this resistance zone from below, and then they're currently pulling back from that level. And of course, coincident with a lower median line extension of this modified shift pitchfork. So anyway, mining stocks taking a little bit of a rest. Dollar in a sideways consolidation, very, very overbought based on MACD in the dollar. Oil started moving up today. And so this is one of the things I had been waiting to see. Obviously we got a big reaction out of gold on Friday. That was when Gaza attacked, not Gaza, the Hamas attacked Israel from Gaza. That's the big move we saw on Friday. And we didn't see any movement in oil until really today. And so now we've got oil pushing up through this is just a simple trend line that had been acting as resistance for the last couple of days. Now it looks like today we're pushing up through that level. Up today, $1.85, 2%. MACD rising up into bull mode and on a new buy signal, and energy elevated. So anyway, we're starting to see upward movement in oil. That's Brent crude. If we look at, this is light sweet crude, different futures contract, also a measurement of oil. And so again, we can see about a 2% rise today, $1.89 gain, pushing up, same as Brent, pushing up through that simple trend line resistance, also the 20-day moving average. Note the bullish alignment, technical uptrend. So anyway, the oil complex is poised for upward movement. And of course, it's not going to take much of anything in the Middle East to cause a significant move in oil. Let's see, natural gas looks like it's not, natural gas is not responding, not making any movement today. Actually dropped today almost 4%, 3.6% drop in natural gas today. That's interesting. And so anyway, didn't see a move in natural gas. Let's keep rolling here. Let's just quickly run through the bond market. That's my 1 month chart. Let's look at the 1 year in the weekly time frame. So no movement today. Here's the 5 year. We're looking again at the weekly time frame. So big movement this week. So far, we're up 6.7%. And did we touch 5% today? Nope, high was 4.997. So basically pushed up into that round number at 5%, which coincidentally is the median line of this Andrews pitchfork, and then pulled back slightly from that level. So anyway, interest rates continue rising. Not seeing much movement here in the 2 year. This is the 5 year again, which we just looked at. 7 year, big move this week. What do we got? Almost 8%. So 7.7% gain this week. Looks like the high was at 5.03 and closed at 5.01. And so here in the 7 year, we're at 5%, just over 5%. Obviously, bull mode on the buy signal and MACD energy is elevated. So looks like interest rates on the long end of the curve are making a strong move to the upside. And of course, that makes some sense given what's going on in the geopolitics. Why would anyone go long on long duration bonds? I mean, you know, putting your money at risk for 10 years at this point doesn't really seem like an intelligent thing to be doing. If you were going to buy debt instruments, it makes a lot more sense in my mind to buy 30 days. These are 1 years, but 30-day or 90-day instruments, or even 6-month instruments. You get over 5% yield, and you're not tying up your money for that long, in comparison to a 10-year note where, you know, it's the same 5%. Why would you buy this bond or this note over something that is much shorter in duration? Doesn't make any sense to me. a lot more risk in this vehicle. And of course, that's why, in my opinion, that's why interest rates are rising more strongly, more rapidly on the long end of the curve, is because nobody is buying out here. And so to attract buyers at the long end of the curve, interest rates have to rise. Let's keep rolling. And so, yeah, same thing here. This is the 20-year bond in the weekly time frame, up 7.5% on the week. Looks like it closed at 5.3%. So poked over 5% today, and very little pullback. This is an impulsive price bar. Couple of ways of determining or deciding that a price bar is impulsive. One of the ways is that it closes very near its high or at its high, and of course we can see that here. There is a tiny wick. Let me zoom in. So we can see that they're little bitty tiny wick. So, you know, this instrument peaked at, where's the high? 5.35, and then closed at 5.34. So closed almost at the high. So anyway, that's one of the measurements of impulsive movement. And then a second way of measuring or determining that a move is impulsive is by the size of the price bar. And so if we look at this candle relative to all of the other candles in this chart, we can say that it is a large price bar. And, you know, we've got a few bars, you know, that's a large bar. There's a couple of large bars, but there's only a few of these large bars in this entire chart. And so anyway, that's another measure of being impulsive, is that we get a large price bar relative to the rest of the bars in the chart. So anyway, impulsive, that's my point. This is an impulsive movement suggesting that interest rates will continue climbing on this long end of the duration curve. If we look at MACD, we've still got a ways to run before we run into this potential area where price or yield, in this case, might at least consolidate, if not pull back a little bit of a correction, even reverse direction at that point. But we're well through 5%. So 5.3% means we're targeting 6% as our next round number. And based on Andrew's pitchfork, you know, we'd probably be looking at 5.7, 5.8, something like that, up at the upper median line of this shift pitchfork. So 30-year, again, another strong move this week, 7.4% gain so far this week. Again, impulsive price bar based on both measures, closing near the high and being a large bar. Same comments about MACD, currently targeting, we'll call it 5.5% up at the upper median line of this shift pitchfork. That's all I've got in this video, folks. I just wanted to take a quick run through the charts and let you see what's happening in the markets that I'm watching as an indication of geopolitical events unfolding. I believe that whatever happens, we will see it in gold and then in the oil markets as well. Currently, gold is acting as a better barometer of events than oil. But oil could very quickly make a dramatic move. I was surprised today. I was reading an analyst who was talking about the Straits of Hormuz and pointing out that 23% of the world's oil moves through the Strait of Hormuz. And based on a shutdown, if the strait was to be closed, that analyst was predicting a price per barrel of $500 to $1,000. Now, I was just doubling the, we already have analysts talking about $150 a barrel oil. I was just assuming, a double of that if the strait got closed, which would mean $300 barrel oil. This analyst was talking about $500 to $1,000 a barrel. I don't know what that would mean for gasoline, $20 a gallon, something like that. Anyway, basically, it would stop the global economy, certainly for the Western world. The economy would shut down with oil at those prices. One of the things that has always stuck in my mind about oil prices is that the oil producers, Saudi Arabia in particular, they need at least $80 a barrel oil to support their economy, to support the promises that they have made to their citizens, the medical care, retirement, all that kind of stuff. Same kind of promises the U.S. government makes to its citizens. That the Saudis need $80 a barrel oil to fulfill those promises, but that the global economy can't really handle $80 a barrel oil. And so whenever oil jumps up over $80 a barrel, the global economy starts to slow down and run into trouble. That oil above $80 kind of gums up the works. And so anyway, the idea of $300 a barrel oil, much less $500 or $1,000 a barrel, just hard to imagine. Basically, a standstill in the global economy. But hopefully we don't get there. I'm going to let you go. I'm just rambling. I'll talk to you soon, folks. Hang tough, live in the moment. It's the only moment that's guaranteed. The past is the past, and we don't know what's going to happen in the future. So I will talk to you soon.